we doing, everybody? So what we're going to be doing today is talking about how to understand sort of ranges within the market to a basic level, to understand how we utilize this as order flow, to understand when we've got internal structure and sort of swing structure realigned, how we can expect to see expectations of swing structures get run, and how we can use these order flow ranges that are created to basically follow price down to essentially see these ranges be respected to come and take out a swing point. So we have two different reasons and ways in which we use order flow in the market. Specifically for me, we have when we price tap. So if we think a change of characters, when price taps back into a significant level and we see essentially it's this change of character, right? But you see this shift in order flow from bearish to bullish order flow or bullish to bearish. This can signify now that once you've had that change in order flow and price has gone from from bullish to bearish or bearish to bullish order flow, and it's hit a significant level, we can start to see sort of potentially the expectation for the swing structure to play out, right? Because it's like that internal shift that's realigned with the external structure. Okay, and then we've got the second way we can utilize order flow is when we've had this structural alignment, which is something we go into a lot more in detail, which is what we understand we'll do when we come into multi-time frame. But just understand it from this perspective, when you have swing structure and internal structure realign, we understand that this could now signify that we could start to see the swing point get ran in the market on this time frame that we're on. Now, what we have is we create these order flow ranges and just note down and say that when we've had the internal structure and swing structure realign and we have this shift in order flow, we expect these ranges to be respected until we see the swing structural point get ran. So if we're bearish and we have internal structure, which is bullish, and this is bullish order flow, once we've had that break of structure bearish or that change of character or that internal structural shift bearish, in line with the swing structure, this bullish order flow changes to bearish order flow, and we create these ranges that we expect to see get respected until the swing structural point gets taken. Now, that'll make a lot more sense once we go into a lot more in detail about it. So what I want to do first is show you how to draw these ranges on within the market, right? Because they occur absolutely everywhere, right? Just to show you how to draw them on, we're not going to talk about how they've been respected or whatever first, because we just want to know how to draw them on, okay? We don't want to We just want to be able to identify them first, and then we'll show you how to use them within your swing structure and internal structure. So we understand a range created in the market is a sideways bit of price action, right? Or we understand where it's a high and that's where a low gets taken, okay? So what we can do is we can see and identify these absolutely everywhere within the market, right? So we can see here now, this is a high and this is a low that gets taken, right? So from this high to this low, we can see that, what is it? It's a range, because we can see that we've got price contained within this. Okay, that's happening, right? So from the top of this range, from the high to the low, we can denote and draw on that this is a range, right? And this will be a range that is created because we understand that when we look at this, look, price is contained within the range, right? So we understand that a range is price that is contained within 2 price points. So we can see we've got this high, we've got this low, right? And this is a range that is being created, right? And to validify this range, we need to see a breakout of the range. Because think of the 4-step process, right? We have a range, okay? We then expand out of the range, okay? We then look for price to come and tap back into the range. Like we said, we look for price to come and tap back in. This is called a mitigation. This will make a lot more sense when we come into supply and demand. But just understand the word of what mitigate means is essentially once price is expanded out of the range, they need to come back and mitigate out of their positions, which means they come and tap price back into the range. So when that's what I mean by mitigate. So what they do is once they've expanded out of the range, like for this in this example, when price comes back down and they come back into the range, this is what's called a mitigation before you get the continuation of price, which is what we've had here, okay? But we can see that we've got these ranges absolutely everywhere on the charts, right? And we're just looking to be able to identify them, and we're just going to plot loads of them on. So we can see here now that this was also at a high and then a low gets taken, right? So we can obviously refine this one, and we can potentially now draw a range from sort of here to here, right? And then obviously this one gets validified. We draw them across, and what we're looking for is the high or the low of the range to get taken, okay? So we understand here now that this has now been broken, and we've now taken the high. We can see this has now broken the high. So this now validifies this range, okay? So if we just move this across for a minute, because this originally was a supply range, because as we can see, we've broken bearish, okay? We were bearish, so we're in a supply range originally, so these are supply ranges. originally, because we were bearish at this given point in time, because we were between these two swing points within the market, which was this high to this low, right? There were original supply ranges that we expected to be validified, and then once this high broke, this now changed to a demand range, okay? Because now the high's been taken, okay? And then within this is where you can just draw them, just look from the highs to the lows, okay? So this is a high to a low, so this is a valid range, okay? And we can see here, what does price do? Price creates the range, okay? Price breaks out, comes back into the range, and then it continues, right? And then this is another range, right? And you're just looking for these highs to lows, okay? So this is another range. We can see that this is this is validified once we break out of the range, okay? And then you can just follow them on. There's so many different ones, and you just want to know how to see them. You can see a high to low, we break out, and we continue, right? Another one here. This is a valid range, okay? See, you're going from highs to lows, okay? And then this now, instead of once this is broken out of the range and come back and tapped into, we can see now, we take the high. So we expect to see a new higher low before a higher high. But what's happened, we've now taken the low. So now this now creates a new valid supply range, okay? And it's just these buy to sell or sell to buy ranges, okay? We can draw them absolutely anywhere. So we can see we have this high to this low. So this is a valid demand range, okay? And then within this, we could refine it to potentially this range, because this is refined buy to sell within this. And then again, you could even refine it down again to see this buy to sell range, sell to buy range, sorry. And we're just understanding that these are all ranges within the market, right? And we're not going to talk about how we understand and read mitigations and things, but we can see here, we're just plotting them on. We can see sell to buy, we break out of the range, we tap back into it. We then create this new range, okay? To buy to sell, we drag it across, and then we can see here now that price is now broken out of the range. We've tapped back in and we've continued. We then created this demand range, okay? Price has tapped back in, price has come in, tried to put in a new higher low to a higher high. But what's happened now, the low has been invalidated, sorry. So now this is turned into a supply range, okay? And we don't want to understand, you might be a bit confused and say, well, how do we utilize this, right? And that will make a lot more sense when we come to sort of actually plotting it. But I just want to show you how we identify these, right? They're absolutely everywhere across all time frames, and this is going to be something how we understand price through data and not time frames, because we understand that we have these ranges that are created, right? You can see here now we have this supply range. We can see from this high to this low, we break out of the range, and then we can see we come back and tap into the range. So think about that 4-step picture. We get a range, we break out of the range, we come and tap back into the range before we continue, right? But then obviously we can see here now that what do we get? Price broke out of the range, it created a new supply range from here to here. We can see where did it get validated? It got validated once we broke out of the range. We came and tapped back into it to continue. But what happened here is created demand ranges to pull back to come and tap back into this, right? And they're absolutely everywhere, right? And you can see this is another one from this high to this low, okay? And then we can refine one from inside this high to this low, right? And then you can refine it to potentially this high, this low to this high, sorry. They're absolutely everywhere, right? And it's just understanding, you're seeing these high to lows, these buy to sell or sell to buy ranges being created. So you could say this, right? It's just a low to the high, okay? We can draw it across. We can see where the validity of it happens once we break out of the range, okay? And then you can refine it to potentially, like, you can see this is a smaller one within this. Then you see the range, we break out of the range, we come and tap back in before we continue. We then get another one within inside of this. You can see from the low to the high, we break out of the range, we come here, and then we try and continue. But this high became weak because it failed to take the low. It's obviously come higher, and they're just absolutely everywhere, right? And you don't have to understand, like I said, how to understand how we use them just yet, but just practice plotting these on, right? You can see here we get this demand range, okay? You can see we get a range. It becomes validified once we take the high, for example. It's come back and mitigated and tap back into it before it continues, right? And this, from this high to this low, is a valid range, right? And we can refine that once we'll do in a second, but we can draw it across, and you can see now price has broken out of the range. It's come tap back into the range before it's continued, right? And we created then another range, right? This is another range, okay? A low to a high, it gets validified once we break out of the range, and we can see here that's lower time frame stuff going on. Then we can see we can refine within this. We can see we've got this high to this low. We then validify once we take this high, okay? We then tap back into the range before we continue, right? And then we continue, and we have smaller ones this high to this low, we can see here now that price broken out, tap back into the range and continued. We then got another range here, and like I said again, we're not trying to understand how these make sense right now, okay, because what we're trying to do is just understand and plot them, right, across all time frames, right. We can go onto any time frame and just go on a 30-minute chart and just go across here, so we can see here that this whole high to this low is one potential range, right, because we can see this is a range from this high to this low. We can drag it across, okay, and then see this range gets validified once this high goes, okay, and we can refine it to potentially this high to this low here, okay. We can drag it across, and then that gets validified once this high gets taken. We can see we've come back into the range and continued, and then we have smaller ranges within this, so we can see we have this low to this high. We can see then this gets validified once we take this high and tap back into and continue. We then get this high, this low is another range. We can see this doesn't get mitigated at all, so hence why when price comes and taps back into the range here, we get a reaction from it, and they're just absolutely everywhere. And I'm like, I know I keep repeating myself, but it's just the same thing over and over again. Just understand how to identify them. So you get this supply range, okay, from this low to this high. We break out of the range and we can refine this and just keep practicing plotting them. Just understand first how we identify them, right? And we can say maybe this low to this high is another range, okay, and we validate that once the low goes here, right? So now this, when price comes back and taps back into this range, you can see we get a strong reaction to it, okay, and then obviously within this we can refine them, right? So we can see here now this low to this high is a range, but then obviously this gets validified here once prices come back down, tap back into it, and then we get another range, right? So that's mitigated, okay, and another one here, get the range, price taps back in and continues, and we can continue to just keep drawing these out and think about these ranges in the boxes. Is this occurring? Okay, once we break out of the range and expand out the range, okay, that's what we're basically seeing. So here we get from this low to this high, okay, they break out the range, they come and pull back into the range, which is the mitigation process, okay, before they continue, right? And this is what's occurring across every single time frame and every single move. It's just ranges within ranges within ranges, right? And like I said, we'll understand when it comes to supply and demand how we utilize these to the full extent, and then obviously how we use them in structure. We're going to show you how to draw these and utilize these correctly. But like we said, we just want to learn how to identify and draw them, okay? Like I said, we're going to go somewhere random again. I just want to show you how to plot them first, right? From a low to a high. This is a valid range. We validate the range once the low gets taken, right? And we can see here now within this we have this valid range, okay? So from this low to this high, we can see we break out the range, we mitigate into the range, okay? And then we can potentially now draw another range, which is this level right here, okay? And we break out the range, we come and tap back into the range before we continue, okay? And then what happens? We have potentially now this bigger range, okay? This is a range, it gets validified once the low goes, because obviously to validify a supply range, we want to see the low go, or demand range when the high goes, because all this is a change of character, okay? And then what happens here now? We come back in, we try and validify with a new lower high before a new lower low, but what happens, right? We break out the range and we get a new demand range, okay? So what's a new valid range? We get this low to this high, right? We can just draw this across, price breaks out of the range, and we continue on, and we come back and tap into the range before we continue. So now this becomes a new demand range, okay? And like I said, I'm not trying to I keep repeating this. It doesn't matter how to you don't have to understand exactly how we utilize them straight away, but we want to just show you how these ranges work, okay? We can see we get this range, we break out the range, come and tap back into the range, and then we continue, right? And then this is a bigger range, okay? And then within this we could potentially now see that we have a supply range within this, right, which is this here, because this the low goes inside of here, okay? So we can see this is a potential supply range. We created another new supply range within this, okay, which gets validified when this low goes, okay? And then obviously what happens, price tries to come and mitigate, to come and continue lower, but then what happens, right? Well, it does actually, then it creates this new, because it comes and taps into the extreme here, and then comes and takes this low, so it created a new supply range, which then turned into a demand range, right? And this is how we'll show you in a lot more detail, but this is now where we've had the alignment occur, where obviously this is taking a low and this whole thing's a range here, okay? But we just want to show you how to keep identifying these ranges, okay? I'm drawing so many different examples just to show you how we have these ranges. Again, we'll go into one more here. We have this range here, like a buy to sell here. we have this supply range, we break out of the range, we come tap back into the range, and then we create a new range. Okay, so we can draw from this low to this high. Okay, it gets validified. Once we break out of the range, we can see that this range never got tapped into, so at a later date, it's a very viable reason to see now if price was to come and tap back into here in the future, that we'd see some sort of reaction, but we can just keep following the ranges. Okay, we can see now we've come back down, we created this new range. Okay, prices then come back down, and we can just continue to draw these on, right? It's buy to sell range, right? And we have a smaller range right here. Okay, they get this range gets validified once this low goes here. Okay, and then we can see price comes back into it. And then we have a refine range here where price now breaks down and taps back into it. We can then create a bigger range, which is this one here. And these are all supply ranges because the load's being taken. We've come and tap back into the range. We can maybe draw this as a refine range within it. And this is where the low gets taken. And we just continue to draw these ranges. And I'm just drawing loads of random ones because we want to show you just how to draw them, right? We get this low to this high. Okay, we can see this high gets violated. So this confirms that we have this demand range. Then we created a new one here, which we can see now didn't get tapped into. So we know if we were to draw that across, we probably get a reaction from it. Yeah, which is what we do. And this is what we'll go into a lot more in detail when we come to supply and demand. But then obviously we just can see now we just continue to get these bigger ranges being created. So we have like this high, this low, high, sorry, to this low is one range. And we can see that is within a larger range here. Okay, and yeah, I hope you can see and understand how we are just drawing these ranges out from understanding highs to lows. We can see this comes out, breaks back in, we come and mitigate back into it. Another demand range comes back in. This doesn't get mitigated at all, so we can see that. We get reactions from these points later on in the future, and we just see these demand ranges being respected. Or just how they are created. Range, break out, we come tap back in, and we continue, right? Once again, we have another smaller range here, and then another one here, and we're just understanding how to draw these on. I'm just repeating this over and over again, just so you can see how I'm drawing these ranges on. Okay, like I said, you don't have to understand the theory behind them, okay, but we just want to know how to continue to put these on. Okay, because it will make more sense as we come into everything as we get later on in the course. So you can see here, now we're just going to continue for a little bit longer just to see how we are using and utilizing and drawing these ranges on. The buy to sell, we break the low where it gets validified here, we tap back into the range, and we get these smaller ranges once again. Okay, and I hope that makes a lot more sense. You can see all the different ranges that we've just plotted along on these charts here. So I hope that makes a lot of sense on how we've drawn them first. Now what we're going to do is just show you how we use these on our charts. Right, okay, so what we want to do now is just show you how we can utilize these supply and demand ranges to understand order flow in conjunction with some sort of swing structure and this internal structure as well, and how we can sort of see that when we get these shifts in order flow, which is essentially these internal breaks and change of characters in the right areas, we can potentially come and see significant levels come and get run, i.e. swing structure, right? So hope we can all denote and understand that we've had a break structure right here to the downside, okay? And what we're going to do is we're just going to understand and draw things from a perspective of swing structure, internal structure, and understanding order flow across the time frames to know when we could be seeing potentially now our swing structure get run. So we can understand, right, okay, following this breaker structure bearish right here, we've left behind a new protected lower high within the market, which is this point right here, okay? This protected 15-minute high, okay? And then obviously we wait for a pullback, and we can see here now we're starting to pull back. We can denote that this now is a weak low. Okay, so what I'm going to do now is just show you now, if we just go to a lower time frame for a minute, I know we're not doing multi-time frame, but I just want it to make sense why I'm going to draw here now. So you can see here now that from this high to this low, this, if we look at order flow, is now a change of character, which we've already learned about. So this is where a low gets taken. Okay. This would be a change of character. The original one would have been down here, but you can see sort of the significant one is this here. So we can see now we've taken a low, we've taken a high, okay? And now we've had a confirmed change in order flow, okay? Because you can see now a high has been taken, okay? So now this is now a demand range, okay? Not that one, okay? So now what do we know? This signifies now that we're potentially, because we understand that when we've got bearish swing structure, which we can denote from this point here to this point here, we can understand and denote that we've got bearish swing structure. What's the expectation of this? That we expect to see lower low, lower high, and a lower low, right? So we understand that when we've now got sort of this bullish bullish structure being put into play, which is this internal structure and this bullish order flow, this again is just playing the complex pullback of the overall bigger swing structure, right? So when we get this like sort of demand range is being respected, right, this gives us that indication that we are potentially pulling back. Okay, but what we're looking for, like we do with a change of character, is we're looking for a change of character in a significant level, just like we're looking for order flow to occur within a specific level. Now, like I've explained before, we use order flow in two main reasons, and we more use order flow in terms of entries, right? We want to show you how it works in very similar to what internal structural breaks or change of characters are within swing structure, right? But it's just understanding how we use it. So like I said before, we use order flow in two different ways. We use either order flow to confirm like this lower time frame reversal zone. So when we tap into a significant level, just write this down. It won't make much sense until we get into supply and demand. But once we tap into this significant level and we get this change of character and this shift in order flow, once we've had this shift in order flow, this can then confirm to us that we are potentially going to see the swing structural play out. So if, for example, the new lower high before a new lower low, when the internal structure and the order flow shift in line with the swing structure once it's mitigated and tapped into a valid and good level. But again, the supply and demand levels we'll go into in the later video. But what we want to understand is that that's one thing, and then once we've got structural alignment, this again, just jot this down when we come into the next video, but when we have structural alignment occur, or think about it from the internal structure versus swing structure perspective, when we've had an internal structural shift and a break of internal structure in line with swing structure, this is that first indication of structural alignment occurring, and what we expect to see are these ranges be respected until the targeted low goes. So let's just say now we get a break of internal structure and we get this order flow shift, okay, back bearish. So we get now sort of, let's just say, an internal break of structure bearish, okay, which is this IBOS here, and we understand now what happens is we create these new supply ranges, okay, because we've now taken the low. And what we understand is when we get an internal break of structure, okay, which is basically realignment with the swing structure, because we understand we're still bearish, when the internal structure and the swing structure are both bearish and we've had that alignment, we've created now on a lower time frame a new protected high, we expect now supply ranges to be respected, okay, all the way down until we take out the weak low, okay. These ranges have an expectation that these should hold until we take out the swing structure, okay, because we understand now that we've had structural alignment, we're creating sets of new protected highs in the market. So that's the other way we use order flow. So how you can do that is you can trade the order flow down, because once we've had swing structure, which is this bearish structure here, and internal structure both realign with each other, you can now trade these ranges all the way down. So you can look to try and take a shorts. I don't know what's just happened there. Yeah, you can try and sell and short all the way down, understanding when we're priced, obviously we are in discounted levels here, but you can just trade with the order flow. And that is what we're trying to get across here, is that that's the two ways in which we look at order flow. But it'll come in as well really in detail when it comes to understanding lower time frame order flow, when we go into really sort of more advanced concepts. But what we can do now is we understood how we drew this demand range. The only reason why I went on the 5 minute was so you can see that we've got that clear sort of high and low here, and we've broken out of that range and taken the high, so we understand we've got a demand range within the market. And all I'm going to do now is just come onto the M15 and just sort of draw what we've got coming on. So we can see here now we come back into the range and we've now put in a new range, okay. See, we've got this new demand range right here, okay, and then obviously it gets validified once we take the high. So here now it's validified because it took all this time, it's all of this range, because we can see we didn't take the high, and even this didn't take the high, and then obviously it's validified once this is broken. So now we play price on, okay, price tap back into the range, and we got originally a smaller shift in order flow, as you can see here now, because what happened is price came back out, tapped back into the range, and it created originally a new demand range right here, okay. But then what happened, right? It broke and shifted bearish, and we then put in a new supply range. But we understood that the reason for that, and this is where we go into really advanced stuff later on, is the reason for that was simply due to the fact that it needed to come back into this level here before we continue, right? So we'll just understand for now that what we've got now is a new demand range. We'll keep it simple for now. But we can see here now, just think of the bigger picture sort of ranges, range, bullish order flows being respected, okay. And what we're looking for is these shifts in order flow in these significant levels. So you can see price comes up now, and now we've had a significant shift in order flow, and we've had that change of character. Okay, how do we see that? So we can see we had this range, price came back down, we respected into this range, right? And we can see this created this new range, okay? And it obviously got validified once we broke out of it, because you can see we had this high to this low. We broke out the range, we came and tapped back into the range, okay? And then we put in a new high, but then what's happened now, this has failed to put in a new higher low before a higher high, and this has given us now a change of character. Yeah, you can see, because now this high is gone, okay, and this low is gone. So like we said before, we want to see these change of characters occur within significant levels. So if we were just to look at this quick shift in order flow here that happened here, when we go into it, you can just write down, we understood that this change of character, despite getting a shift in order flow, because we can see where the change of character occurred, we can see the high has gone here, get the change of character, the high, and then the low gets taken, okay? We can see that's where that occurs, okay? But we understood that this didn't happen within any significant area, okay? Because if we look to the left, when you understand, when we come to supply and demand, but you just note this down, we need it to happen, a change of character, and a shift in order flow needs to occur within significant levels, supply and demand levels. This didn't happen in anything, right? But this has, okay? We won't explain why, but this has, okay? But like I said, just note down, we need it to happen within a significant level. So what's happened here now? We've now created a new supply range, okay? We've now had a shift in order flow, right? We've mitigated or come to a significant level, okay? And we've created a new supply range. So we've had now a shift in order flow at a significant level, and it's in line with the swing structure. Now, like I said, order flow is a lot more messier than what swing structure is, right? Because you consistently get these breaks of these highs and lows, right? And, you know, order flow is a lot more messier to trade than swing structure, right? Because you've got swing structures, you have protected highs and lows within the market, etc. And like I said, when we come into more advanced concepts, we'll understand how to understand it a little bit more in detail. But this is just to understand it from a perspective of understanding that when we get this internal shift in change of character, we tap into significant levels and we get this alignment where internal structure and swing structure realign. We can now see these respected supply levels. Essentially now, we can expect to see now supply levels get respected, right? So we can see here now, up until we take that low, we can see here actually what happened is we created this new supply range, okay? This new supply range here, okay? And this is what I mean, structure's messy, okay? We can see we originally created this new supply range, which broke out of the range and turned back into a demand range here before turning back into another supply range. And this is what I mean, and I'm saying that this is where order flow gets a lot more messier to trade. And we can see then it also then turned into a demand range, but then back into a supply range, okay? Because obviously this might have been like a sweep of liquidity, which we'll go into again in another video. But when this then created a new supply range, which was this, okay, it broke out of the range and obviously came and tapped back into the range. So now we can see here now that you get in the pullback phase, you see this bullish order flow, okay? And then once we've now had that change of character at a significant level, okay, and it's in line with the swing structure, we can now see these ranges be respected. So we can see we get the range, which is this, okay? Range, we break out of the range, we come back and tap into the range before we continue. Same thing again, this was the range, we break out and we can mitigate into it before we continue, and then we get the range, we break out, and we expect to see these ranges be respected when we've got this alignment occur, okay? And now what we're going to do is just going to go into another example. Perfect. So now what we're going to do is just going to go onto the 1 hour chart and just sort of understand and denote what we've got going on here, right? So we can see here that if we just understand and look, we are currently bearish on this time frame. We can see we got this breaker structure right here, okay, originally, okay, which left behind this new protected level right here. We then tried to put in a new low here, okay, with a failed to close just on this specific time frame, which then led to this breaker structure right here, okay? So we can denote now the highest point that's led to the boss is this point right here, okay? So we understand now that this is a new protected low within the market, right? This is our protected 1 hour low, high, okay, 1 hour protected high. And what we can understand is that now what we're looking for is just following current market structure. Want to see a new lower low, a lower high before a new lower low. Okay, so now we understand that when we're looking for is a change of character in a significant level, which is the shift in order flow, right? We expect then to see these ranges be respected, sort of these demand ranges, and then if we then sort of get this shift, where we get this internal structural shift in line with the swing structure, this is where we can then expect to see potentially the expectation to come and take out the new swing point, right? So if we have a look and see what's going on right here, we can see we get a range, and we've now had a validified demand range occur in the market, because we originally had this supply range, okay, this buy to sell, prices come into it, and then it's failed to take out and put in a new low, but now what's happened, it's now put in a new demand range, right, which is also now a change of character. See this demand range, okay, and we've had this low followed by this high get taken. And now what we can understand and say and denote is that we could potentially now be seeing the pullback phase of this bearish swing structure occur. Lower high, lower low, lower high, lower low. Okay, so what we can do now is potentially just see the ranges occur. So we know we're looking for, we see a range, we expect price to come out of the range and expand. We come back into the range to mitigate and continue. So we just be seeing now, this now range should hold and continue. We know that we expect that either the low, if the demand range is to hold, the low to remain intact. Okay, so let's see what happens. Price comes back down, it comes out, taps back into the range, and create a new demand range, which is this. Okay, because we can see we break out the range, price taps back into the range, and then we continue, and then we can now see, is this low going to hold? Yep, so now this low holds, we come back into the range and we continue up. We then create another new range, which is this buy, this sell to buy. Okay, and we can see we're breaking out the range, we've come back into the range, and we can see now that these are being respected. You can see now that we've broken back out. We had an even smaller one, because this has come back out, tapped back into the range and broken again. So then this became a demand range. That got validified once we broke out of the range and came back in. We then created this demand range, okay, which got validified once we took this high. Okay, and this is confirming to us now that we can see this bullish order flow happening in the market, right? But we can understand and denote that we are still bearish between this swing point and this swing point right here. What are we expecting price to do? We're expecting price to come and put in a lower high, lower low, a lower high before any lower low, right? We can see that what we expect to see now is, obviously, this is the week low on the 1 hour. So what we can expect to see happen next is for price now to come and tap and come down here. So what can give us that first indication is when we get this internal structural shift, okay, where this internal structural shift occurs, where we then get a change of character, or this bullish market structure and bullish order flow, change from bullish and fail and turn bearish. We get a change of character in a significant level. And this is which is what we'll go into later on, but just understand we want to see it in a significant level, and then once we get this shift, we can then expect to see now this get ran, and when the ranges can expect to be held until potentially we come and take out the weak structure point. So let's just play price on. So we created a new range. I went a little bit too fast then. So we created now a new range, okay, this high to this low, broken out the range, okay, and now what happens? We've now had a break of the range. We can see now the range has failed to hold. We've had a change of character. We can see we've taken a high, okay, and then we go back down to the low. We can see we've now had a low bit taken. We've now had this change of character, and now we can see, if we to draw this and to know what's going on here now, we've now had a supply range being put into the market. So this bullish order flow has now broken, and we now have bearish order flow occurring to the market. We've now got these supply ranges being put into the market. So now, as long as this has come off something that is significant, that makes sense, we could now potentially see these supply ranges now hold to come and target to take out the weak low, because now we've got this internal structure. So the swing structure realigned, we could now potentially look to come and target to come and take out the low. So we can see prices create this range. It got validified once this low went. We've come back into the range and we look for continuation. Like there, we broke out, so we can see now this create this new range. It got validified when this low went. We've come back into the range, and there we go, right, to come and take out the low. So obviously then, where are your trades? You can look to get involved in this trade right here. You can just trade the order flow down. So once prices then create this range and we've broken out, when price came and pulled back into it here, you can then look to get involved in this trade to come then and take it out. And we expect then, once obviously we had that change of character, order flow is realigned with the swing structure, we can then potentially see the expectation for the low to come and get run, and obviously then you can look to see the ranges hold. So like we said, the two main reasons for order flow we like to see is to show that when we get this reversal going from this bullish order flow to bearish order flow at a significant level, to show us then we could be seeing realignment occur. And then the second one is then once we've had these timeframes aligned, you can trade the order flow down to come and then potentially come and target to take out the structural point right here. So hope that's made a lot of sense. If anybody's got any questions, as always, feel free to send them over.